So good afternoon. Welcome to another interview for the GLIO CEO interview series. My name is Leonardo Anguiano, and I work as a portfolio manager for global listed infrastructure at Covalis Capital. Today, I have the pleasure of interviewing Emmanouil Moustakas from GEK TERNA. He is a member of the board and General Director of Business Development. Welcome, Emmanouil.
Hello, Leonardo. The pleasure is all mine.
Exactly. So you've had a very exciting few months from a number of transactions, from the evolution of your business, a number of years, in fact. You've recently had a very successful and highly desired capital increase that we'll talk about in a minute, because there is a lot to do in your existing concession portfolio and other projects, so we'll discuss those. And Greek infrastructure development is really on fire. But I think it's important because not everybody in this forum is familiar with you. If we take a step back and start with a little bit of the history of GEK TERNA, can you please take us through the quick history of GEK TERNA and the strategic decisions that took you from and transformed you from a construction company way back when into a company that developed renewables, energy. Eventually you exited energy and moved into toll roads and the current status you're at. Let's start there, please.
Okay, these are sneak previews. I'll start from the beginning. So practically we started as a general contractor back in the early 60s. The companies comprising today's GEK TERNA were more than one, but more or less they both started, all three of them started actually during that period. And at the time, there was a construction boom in Greece in the 60s and the 70s. Lots of big companies at the time. Not many survived the 80s and the 90s. Unfortunately, the companies that comprise this group now were the ones that managed to prevail through the difficulties of the 80s and the 90s. But the overall story is not just a merge of a few construction companies. It's a story that's you probably have heard before from the Ferrovials and the Vancy's of the world, because there was a transformation from a solid, old-fashioned general contractor into something that's, I'll explain what we are today, into something that's mainly an infrastructure investment company. So the story goes as follows. During the end of the 90s, people started realizing that it makes sense to start reinvesting some of the benefits, some of the profits from the construction business into the projects that we were constructing at the time. So we started pouring some money into real estate, which is a very usual story in the industry. Then came some very early small-scale concessions, which were at the time, if I'm not mistaken, some small underground car parks in Athens. Nothing too complicated. People didn't really realize at the time what they were doing, to be honest. Then, during the end of the 90s, we started pondering into entering the renewable industry, which at the time, it was at its infancy. So we started investing back in 1996, 1997. And we succeeded in being practically the first Greek renewable energy power producer. This was a success story, but this was our first real endeavor into investing long-term and at the same time knowing what we were doing. We were still, though, mostly a construction company with some hopes of getting back our money from our investments. The real change happened post-2004. So we had just invested some more money into thermal power production. We were also the first IPP in Greece in terms of electricity production from natural gas. That was in 2004. But right after the Olympics, we had a very sharp progress on the, at the time, infamous and famous at the same time, Greek projects, Greek motorway projects. It was a big, even from European, for European standards, it was a big pipeline of motorway assets, and practically everyone who was in the industry at that time in Europe got involved. Now, a lot of negative criticism at the time because these programs started back in 1998 and it had managed by 2005 to be delayed for at least 7 years. So not everyone that got initially interested was still on board. Nevertheless, we had a consortium at the time with our Spanish partners. At the time, it was Centra Ferrovial and ACS concessions, and it was before the time that ACS acquired Dragados and Hochtief. So we started really preparing to bid for those projects, and it was exactly the time that we realized that, you know what, construction is entirely different, a different thing compared to investments. So we liked what we saw. We later on merged some interests, and we were partners with Vinci and Hochtief again before the acquisition from ACS. So we saw a couple of companies being structured in a way that we did not anticipate would make sense, and suddenly this was a new world for us. So we did what usually people do in such circumstances. We copied what we liked, and we cherry-picked the interesting structures, and we tried to picture ourselves as a combination of the most successful bits and pieces from our partners. So practically, a transformation started back in 2007. It took us a few years to start looking like a real investment company. I dare say that it took us more or less 10 years. So we started being a real infrastructure investment company back in 2015. Unfortunately, by that time, the Greek crisis had already started. And crises are, interesting periods. Obviously, they're tough as hell. The Greek one wasn't precedent at the time. But at the same time, they provide opportunities. It did work out for us, so we kind of navigated the dangerous waters of the Greek crisis. It was tough, but we exited the Greek crisis period back in 2019, 2020, actually the quite difficult part of it, being much stronger than how we were when we entered. Lots of things happened. We had a number of partners, international partners, leaving the country, leaving space for us to consolidate our presence in the market, admittedly reducing the competition for the projects that never stopped coming. And I will make a comment here. I will come back later. Greece was heavily underdeveloped in terms of infrastructure, and the pipeline for infrastructure is admittedly quite heavy and quite difficult to move on. So we were seeing projects during these 10 years of Greek crisis that actually started being prepared more than 10 years before. So in reality, we never stopped seeing new projects arriving in the market, and being more or less with reduced competition allowed us to get our hands on a number of projects with good terms.
Which is sort of the key thing, because the story you've told is a very long story of evolution from a traditional construction company that goes into being an asset owner, obviously over a very complicated period for Greece. And you saw many iterations of projects. You had to withstand many difficult periods on the financing, I presume. So many lessons learned. But it sort of brings us to today, because you were able to build a successful energy company, which you subsequently exited. In tandem, you were able to get and acquire very interesting, long-dated transport toll road concessions, which we'll talk about in a second. But if we can just go to the picture today, if you just finish that story with how you exited energy in a big term, in a successful way, and move to the current portfolio. Because as of today, and we have lots to get through, we're sitting on a young portfolio with very strong organic growth that has huge, that provides a big platform for your future growth opportunities. So if you take us through that last bit of the story, then we can talk about the current concessions, please. Thank you.
I'll give you some more color, because practically the transformation had two specific periods. The first one, we really became an infrastructure investor from being an old-fashioned general contractor. But that was stage one. There was a stage two, during which we realized that we cannot really start investing on assets of any type. And I'll explain why I'm saying that, because there was a certain point that we realized that we had a quite interesting portfolio and exposure on renewables. The same applied on utility and energy utilities, where we had thermal power generation. We had also a large number of clients down. We were practically an integrated utility, and we still had a very strong construction arm. I will come back to that. And on top of that, we had investments in motorways. Airports were coming up. So we realized that it didn't really make sense. We needed to have a specific focus on a specific industry, and both renewables and thermal power production and retail of electricity and motorways didn't really work. So we took the decision to divest from renewables. At some point, there was a quite successful sale to Masdar. So we exited the market after a quite successful 20 years of presence, when we got some, I think, reasonably good money out of the sale. We have decided that our focus is going to be on infrastructure that has to do with transportation and water. There is a third smaller scale potential field of interest, which has to do with infrastructure again, but not transportation, and that being the civil infrastructure. This has some similarities to transportation, in the sense that the contracts are very similar. I'll come back to the contracts that we see now in Greece, both in PPPs and concessions, because they have some distinct similarities and some distinct particularities and differences from the rest of the European ones. But practically, all these 2.5 jurisdictions in Greece, meaning transportation infra, water-related infra, and civil infrastructure, tick the following boxes. One, the quality and the type of the contract is what we like. So long-term, usually 30 years, strong quality. I'll explain more about that, with pretty solid and foreseeable revenues. So risk-adjusted, they are quite conservative, which is what we like. And it allows us to really forecast our numbers, even as far away as 30 years from now. Although I understand this sounds like an exaggeration, but I can explain later why this is the case. So, repeated, foreseeable cash flows. Where some of them have some volume risk, others are quite regulated. We like both, as long as they can tick the boxes that I mentioned earlier. So we're now focusing practically on infra, water, transportation, and civil.
So it's a very interesting portfolio, and it's a complex one. But if you focus now and we move to today, obviously we've gone through the history, a lot of changes, a lot of evolution, a lot of experience and track record. But as of today, the core of your business, the core of the value remains toll roads. I guess key issues that maybe differentiate it from other portfolios. It's a very young portfolio with a long residual tail of time. As you say, there's a variety of different contracts. There's a few specificities that we can discuss, and also a very good contractual context. So what we see is a cash flow profile, organic cash flow profile for many of these assets that will continue to grow meaningfully over the next few years and then has a residual tail. So maybe if you just quickly focus on the quality of the concessions overall and the longevity of it, because what we see from a valuation perspective is that the peak value for these existing assets, without you even doing anything else going forward, doesn't reach its peak for a number of years yet, contrary to many other portfolios out there which are more mature. So maybe if we just focus a couple of minutes on that, because that will take us to the growth opportunities beyond that.
So practically, yes, you are correct. Transportation infra is the core of the value in the company. Mainly, we're talking about old-fashioned highways that we own under concession or PPP contracts. The difference is simply that the concessions are tolled roads, and we have some upside and downside regarding volume, so traffic risk, whereas PPPs are non-tolled motorways, and we just have availability payments. Now, what is the issue? We have something like currently more than 85% of the Greek motorways under our management. This means a bit more than 2,000 kilometers as we speak. I will not talk now about what we expect for new projects to come, but if we just take a look at the portfolio today, we'll see the following characteristics. Number one, we have a residual life. It's a bit more than 28 years. I think that this is the youngest portfolio, I think, in Europe. And if you take into account the size of it, because it's not one or two projects that may incidentally be, quite new, we're talking about a considerable amount of kilometers, so a quite robust portfolio, and the 28 years is a quite significant number. So we have both projects that are already operational and running. We have projects that are currently new and are within design and construction period. And we have in between, we have projects that were already operational. We got them, but we are now in the process of revamping them because they need some major maintenance in order to really comply with the KPIs and the criteria for service level. Because you did mention that even if we don't do anything and we just sit waiting for our motorways to mature, our valuation will increase. I'll give you the following. Currently, as we are now, practically more than 70% of our EBITDA generation comes from the investments in these assets. Parenthesis, the remaining 30%, half of it is from the profitability of the constructor, and I'll come back to that again, and the rest is from a variety of other diminishing operations, such as energy that I mentioned before. So this 70% plus is going to be increasing gradually for the simple reason that the projects that I mentioned that are within design and construction period or within revamping period are going to gradually being de-risked, meaning that construction is finalizing, revamping is finalizing. And usually when this happens, we have the contractual right to increase toll rates or increase in the sense that all motorways in Greece have the same toll rates. So the ones that are under construction or revamping have lower rates. So we are increasing up to the normal and usual levels for the entire of Greece. This means that EBITDA is going to increase close. I mean, we're currently now, this project generates slightly close to 500 million, and we're going to double that up until 2030. Even if we do not do anything, we don't get any new projects. I mean,
and just one observation, because I mean, just for the audience, it's very interesting. When you have an existing toll road, which is a good asset, where there's underlying strong dynamic demand, and you have the ability to expand it, to improve it, to invest organically on an existing asset, that releases or reduces bottlenecks. And from a risk-reward perspective, as an investment, it's the best you can have, right? Is that a fair statement? Without going into numbers, but it's something that, in my experience, infrastructure companies, construction companies really love, to be able to add value to existing assets. Is that a fair statement?
Yes and no, and I'll explain why. I think that the value generation is even higher than the one that you mentioned. But I'll explain how we can achieve that if I have to take a step back and explain a bit about how we are organized. As I mentioned before, we have actually cherry-picked the things that we liked from our partners. So practically today we're something like 70% of what Fintra Ferrovial was at the time, not now, at the time. The rest is a mix in between VINCI and ACS. This means that we are what I usually like to call ridiculously vertically integrated in the following sense. When we look at a project, even from the conceptual, as early as the conceptual time, we look at it internally from A to Z. We check whether it is interesting in terms of revenue generation. We do our own forecasting of revenues, our own forecasting of cost regarding design construction period, our own financial engineering forecast, and we do anticipate costs of operation maintenance and major maintenance down to the last year. So when we enter into trying to acquire a project, obviously we use advisors and third parties, but we really base our assessment and our interest and our competitiveness on our own internal assessment and forecast. And then we keep on managing the project in the same way, meaning that not only do we invest equity, not only do we engineer the financing of it, we do the design and construction, then we follow up on operation and maintenance and major maintenance, and we try to manage all the intermediate levels that comprise the full project for the following reason, not just because we're squeezing out profit margin from every single level. This is reasonable. Whenever you undertake a risk, you have to have a reward, but mainly because we manage to reduce the overall risk of the project. So we de-risk the project by managing every intermediate layer of the project. We manage to become more competitive. We manage to be more profitable. So this is a combination that allows also something more. It allows us to manage the project from A to Z, from the first to the last year. This means that we take advantage of every opportunity that we can get. It's not a passive management. I mean, it's a motorway. As soon as it's built, then it needs, yes, operation maintenance and major maintenance, but a number of opportunities arise during the 30 years of the concession period that makes a lot of sense to take advantage of.
Yeah, and then just conscious of time, because from experience, we're told by the GLIO board that we should keep these to half an hour, and that's fair. But I'm very happy because I think I wanted to be able to extract what you just said, i.e., it's not a static portfolio. It's a young portfolio that gives you lots of leads because of the way you operate in an integrated method. And you're so dominant in the Greek economy and the Greek market, which is growing, that there are many opportunities that you can generate incremental value with, which takes me to my last question. And we have quite a few minutes left, but in a way, and I know we've covered a lot and maybe we haven't answered everything, but I'm very happy to get to this point. I've had a lot of people come back to me and just ask me what, they've done extraordinarily well. They were there at the right time. They were there when the competition was not so strong. Right now, there's still opportunities organically and through airports and other investment opportunities. However, they're already generating cash flow. Why did they feel the need to raise equity at this stage in order to accelerate, or are there more opportunities? And I think obviously in the end, the market was very happy to give you capital, because if maybe you can give us some metrics. My understanding is that the capital increase was massively subscribed and very successful. In the end, the discount at which you placed relative to the share price was minimal. But maybe run us through why you felt the need to do it, and what does that say about the opportunity set that you have in front of you? Is it just faster and more of it, or you just see it as a good timing? I think that would be the last question. Again, very convoluted question, but that's kind of
it's a very reasonable question, because up until a few months ago, we were telling our audience that all our capital needs for the next 5 years are already calculated and they are in place, and we know where we need to spend our money. And suddenly we came out and said, "Like, guys, we need some more." So we were actually quite happy to do that. Why? Because the reason we did it was that a certain number of projects were, without us anticipating it, accelerating their development. And I'll explain. I know you know that infrastructure projects have a lead time which is extremely long. I mean, we're talking about at least 7 years. Most of the cases 10, sometimes years, sometimes it's more. So this slow pace provides ample room to forecast when a project will come to maturity in order for you to be able to be prepared to tap it. In this particular case, we had a few cases that simultaneously got accelerated, and actually, as I said, we were quite happy about it. Nevertheless, we needed some more money. So we have a number of projects that are actually hitting the tender date much earlier than we anticipated. And I know what you're going to say. You're going to say, "Manos, okay, this is a public tender. How do you know you're going to need money? You're going to need money only if you are successful." But in reality, we have some competitive advantages which are, I dare say, unique in the following sense. Whenever we have large projects requiring a large investment, which usually attract international interest, in Greece we have the particularity that not many international companies have boots on the ground, and it's important to have boots on the ground because whenever you have a design and construction phase, then the associated risk needs to be managed efficiently. If you are not able to perform construction yourself, if you are not vertically integrated, by necessity you'll have to align yourself, your interests with a local contractor, and this is where it starts getting complicated. When it gets complicated, it gets more expensive, competitiveness lowers. So it has been demonstrated again and again recently and earlier as early as the first decade of the millennium, that whomever does not have construction capacity locally cannot easily be competitive in such bids. So we have the following advantages. Obviously, we have the largest, more efficient, effective, and competitive constructor, judging by the results of international tenders locally. We have capacity, and at the same time, we have a unique way to approach projects, taking advantage of our particular competitive elements. We do know that we will be successful in most of the projects that we are getting interested in. This has been demonstrated in the past. There is a reason for that. The reasons have not changed. The situation has not changed. We believe that these projects that are now in front of us earlier than anticipated will really be a very nice story when we are talking again, let's say, a year from now.
And perfect. That's very useful. And you continue to have the discipline of evaluating all of these projects with a strict view on, equity internal rate of return, or an adequate return that is accretive to the overall value of the company. You're very focused on that, right? And where you have a true advantage, you're not going to go and be, go in too many directions. You know where you have a key advantage in your home market, and you believe you can make very good and adequate returns on these projects.
That's entirely true.
Perfect. Well, I think we've hit the mark of 30 minutes. I could talk a lot longer because your company is fascinating. You've done a really good job, but I think this is exactly what we needed for this forum. And I'd like to thank you on behalf of Covalis and GLIO for joining us on today's.
Thank you very much, Leonardo.
Have a good afternoon.